Hello and welcome to the Digital Insurance Broker Program. Here we discuss the digital marketing strategies that are going to take you in your journey towards writing policies every day. And what I mean by that is that you're going to have a set of tools that are going to be generating leads in a recurring fashion. That way, you're going to have enough leads that will allow you to write at least 30 policies per month. My name is Ed. I am a digital marketing strategist, and I am specialized in lead generation for the insurance market. In today's episode, we're going to talk about how not to lose money while doing your digital marketing campaigns. And let me ask you a question. Have you ever been afraid of launching a digital marketing campaign and losing that investment? In other words, losing the money that you put in, or not receiving leads, or not being able to write policies. If this is something that you have already experienced, give me a like in this buttons in this video so I will know if this is a topic that is relevant to you. Now, you should not be afraid of launching a digital marketing campaign and losing money. There's absolutely only one way that you're going to lose money with a digital marketing campaign, and that is if you don't optimize it. That is the only way. If you set and forget, meaning if you go and you launch your campaign and you're not on top of it, then the chances are that this campaign is going to be a loser, and the investment that you made could have a negative return. Now, if you launch and you optimize and you're on top of it, then there's no way that you're going to have a negative return on your investment. It's simply because of the way that digital marketing works. And before I explain how it works and why this is connected, I think you need to understand the two types of marketing activities that exist. If you think about ways that you can attract new clients to your brokerage business, you can do radio ads, you can do TV ads, you can do Google ads, Facebook, Instagram, you can do Waze, you can do Spotify, you can do brochures, you can do prospecting, you can hire a prospecting firm. So all of those are marketing activities, and some of those are measurable and some of those are not measurable. And that is the first way that you can divide marketing activities in marketing activities that are measurable and the ones that are not. And you might think that that some activities are measurable. For instance, if you want to do a radio ad, the station might tell you that their audience is of X thousand listeners, and then you run an ad, they play your ad, but that's not measurable because the only thing that you know is that they think that their listener base is about 10,000 listeners, 100,000 listeners. You do not know how many of those listeners actually listened to your ad. You do not know how many called you, and the ones that called you, how many went all the way and finalized, and you wrote a policy for them. Now, you could argue that when someone calls you or your office, someone asks them, "Hey, how did you hear about us?" And they might say, "Oh, I heard your radio ad." But that's not measurable because there might be people that are not answering that question, that are lying, or they don't know. So it's not truly measurable. And if you look at the other way, then you have the measurable marketing activities. And for instance, with Google, if you put $500 in a Google campaign, they will tell you, and not only they will tell you, but you can also track how many ad impressions, how many times your ad was seen by people. You know how many people clicked your ad. You know how many leads you got from those clicks, and you know how many opportunities you opened and how many policies you sold. So it is a fully measurable journey, and that is the type of measurable marketing. Now, don't think that every digital marketing strategy is measurable. There are strategies that are not fully measurable. For instance, a referral program. Even though you could be implementing sophisticated tracking mechanisms, but it's not, in general, it will not be fully measurable. So which of the two, measurable versus non-measurable, should you be focusing on? You should be obviously focusing on the measurable marketing, and that is because until you have really studied, implemented all of the marketing strategies that you can control through tracked metrics, then you should not be doing the hope marketing. The hope marketing is the type of marketing activities that you do and you hope and you pray for results. For instance, if you print a brochure, a flyer, and you hand out in a shopping mall, or you hand out in a public place, you should not be doing that until you have really covered everything that you could do on social media, on Google Ads, simply because there's opportunities for you to go into the digital marketing campaign game knowing that you're going to win. So why is measurable and tracked marketing so important? And the reason is you cannot manage what you don't control. And with digital marketing, you can manage if you control. If you know what your impression to click ratio is, then you know how to improve your ad copy. You know how to be more creative. You know that you need to change the creative. If you know your click to lead ratio, then you can improve your landing page. When you focus on measurable marketing activities, you will be able to pinpoint where your lowest hanging fruit is and then optimize it. And that is the key. And that's why I said that it's simply impossible for you to lose money on measurable marketing and digital marketing activities, because you can always see where the weakest link is, and then you go and you fix it. Now, that is one of the main advantages that you have with digital marketing. You can do that really quickly. You can, in a matter of days, you can run your ad and you can see where the weakest link is, and then you go and you fix quickly that, and then you run the campaign, you let it run, and then you go see if what you did was sufficient to start getting a positive ROI. You cannot do that with traditional media. If you want to run a print magazine ad, then you never know if the copy, if the creative that you designed is going to convert well or not. So that is the main advantage that you have with digital marketing, is the velocity, how quick you can implement and see changes. Now, in order to have a profitable digital marketing campaign, you need to do something first. Even before you make your first click, you create your campaign, you need to do something, and that is plan. You start every digital marketing campaign with a plan. You set a goal, and then you walk backwards towards the click, because that's what you're going to buy. You have to look at Google, Facebook, and whatever. Those are the main ones, but you can look at LinkedIn, Quora, you name it, other places where you can place ads. You should look at them as click stores. And what that is a store where you go and you buy clicks and you set the price. You're going to tell them how much you want to pay. Now, the only way for you to set the maximum price is by planning. Let me make an analogy here for you. Let's say that you can't swim. Okay, let's imagine that you have never learned how to swim, and then some friends ask you to go on a trip with them and to the beach, and they all go to the sea and they're swimming, and you're not. You're at the sand. Would you go and would you join them without knowing how to swim? You probably wouldn't, because you wouldn't do an activity that you're not prepared to do. And the risk, if you go and you go to the sea without knowing how to swim, is that you're going to drown. Now, for some reason, people will do marketing campaigns without preparing how to do it, and they draw. So you need to go. Let's go back to the analogy. Let's say that you know that you're going to go to a trip and there's going to be a sea and you want to go and swim. What do? You learn how to swim. So you get someone that is going to teach you. You go to a swimming pool, and it's going to be easy and shallow, and you start just floating, and then you go and you improve, and then you go to the sea and you don't jump right in. You work your way, and then eventually you're going to be confident enough to swim on your own. And it has to be the same way with digital marketing. You have to plan, you have to study, you have to know your way around. If something happens, you need to know why that happened and what to do. And I know if it might feel complicated to you, if this is new to you, and as it was for me a few years ago, but it's possible. It's possible. You just have to acquire that knowledge. And here's the thing. When you acquire that digital marketing knowledge, when you build the digital marketing muscle, it's going to help you sell better. It's going to help you market and sell anything. What you're really doing with digital marketing is learning how to get people's attention to you. And when someone gives that attention to you, you can sell anything to them. And that is what learning digital marketing is doing for you. So think about that. It's worth the investment, and you have free resources to teach you how to do that, like the digital insurance broker program, like this one. So and that takes me to, why not outsource all of that to a marketing agency, to a freelancer? And here's the thing. When you outsource and you give them your money, then nobody is going to have a skin in the game. You might think that when you outsource, you're just letting them do your campaign and do whatever they need to do to bring you leads. But if things go south, if they don't have a positive return on investment, which normally they will not, because they will set and forget your campaign, do you know which money is being burned? Yours. And that's why that's not the alternative. The moment that you outsource is the moment that you're giving the responsibility for someone to waste your money, to really burn your money. And I'll prove that. will they give you your full investment back if you don't sell policies from the leads that they got you? Will they make that guarantee? Because if they do, then that means that they have skin in the game. Now they will not, and that means that they are only after your money. They don't care if the campaign is going to perform or not. The only person that is really going to be worried if you generate leads and you write policies is you. That's why you need to control your faith and your destiny. It is your money, your investment. You need to watch it. Now, it's not hard. That's the thing, it's not hard. And I will teach you how to plan in this episode. The type of comment that I really enjoy reading in my videos is the comments that says that, hey, you were very hands-on. It's not about the theory behind digital marketing and how it works. It is hands-on, and it is about the insurance market. And if that thought has crossed your mind, do me a favor, write that comment here. Let me know if that's something that you enjoy. So let's go and be practical here. How can you plan your campaign? And remember, that is the number one thing that you should be doing, planning. Let's say that you want to sell any type of insurance product, be it life insurance, be it auto insurance, it doesn't matter. You need to plan. And the way you plan is with an Excel spreadsheet. You need to go and you need to just work backwards. You want to sell one policy and then you work backwards. Now, what it means to work backwards, and this is where I'm going to become high tech here. I made some changes here to the way that I'm building this show, and it's going to give you more opportunities for you to learn. So let me change this to my screen here. All right, so this is neat. Now this is what I'm going to show you. So now I can draw here. There you go. Now I can draw here, and let's change the color here. And I'm going to start over here. Let's say that you want, what do you want? You want money, right? You want commission. And that's a policy. Now the problem here with my new technology is that you're going to see how bad my handwriting is. It's actually worse when I write here, but anyway, it's good content, so bear with me. So you want policies. What do you need in order to write a policy? Let's go backwards here. You need quotes. You need opportunities, right? Opportunities. Let me just write ops here. So you need quotes. Now, in order to write, to present quotes, what do you need? You need leads. Leads. So you have leads. So this is a sales journey, right? You wake up one day and you have a lead, and you call them, and they say, "Hey, I have a car here. I need some cheap insurance." And then you say, "Sure, let me get you a quote." And then they write the policy, so they start working with you, okay, and you get your commission. So this is the sales. This is sales. You have something that happens before sales, which is marketing, and marketing is going to be here. Marketing. Okay, so what do you have in the marketing front? In order to have leads, and that lead is in a landing page, you need people clicking and going to your landing page. So you have clicks. All right, so, and then before you have clicks, you need to have ads. That is your entire journey. Now, what Google, Facebook, all of the media providers are doing is showing ads to the right audience, and they eventually click, and you get clicks to your landing page, and some of those clicks will become leads. Then you call the leads. You might not get, you might call someone, it's the wrong number. So there's always a conversion rate in each section here. So you might not present opportunities. You might not have opportunities for every lead. And then you might not write policies to every quote. So there's a conversion rate. Right, so we're now learning how the mapping the process here. What do we need to do next? We need to open a spreadsheet, and I have one right here. And then you're going to start on the first cell here. You're going to write your commission, and this is going to be a currency. So you need to think about how much you make when you sell a policy, and it could be, I know it's going to be hard, and people normally get blocked here, and they don't know what should I write. Just put a ballpark. I know it changes. I know it just put a number. Let's say you make $500 if you sell a certain insurance. It doesn't matter which one it is. Put a number. That's where you're going to do one campaign per product anyway. So this is going to be, you're going to do this spreadsheet per campaign, per objective. So let's say you put this, but with $500, that's what you're going to get as a commission. You have to pay your phone, your fixed costs. You have to pay for the supermarket. You have to pay that's your profit. So you can't use the entire commission as your marketing budget. A portion of that commission needs to be your marketing budget. So what is going to be your marketing budget? Marketing budget. So it's going to be a percentage here. So you can even do this. So let's say that you want to do 35%, and that's really up to you. You do whatever you want here. So 35%. Now, that's your marketing budget. Now, let's go back to the flow here, which is, right, so the flow is over here. What we need to do is do this flow in the spreadsheet. Okay, so one policy is going to get you that. Your marketing budget is going to be this. Now, how many, or you can do this. I need, let's say you need 2 quotes to write one policy. Just write like that. Just go rules step by step. So you need 2 quotes to write one policy. Why is that? Because if a client is shopping around, they might use a different broker, someone that they know. So you have a conversion rate there. So if you are a sniper, and I met one that is a sniper, one quote, one policy, and you just put that over here. Now, how many leads do you need to present quotes? So I need, let's say you need 3 leads to present one quote. And what that means is you might have 3 leads, and they might, you call 2 and they were busy, and then you call back, they don't take your call, and then the one that takes your call becomes an opportunity. So that's what I'm doing. So right here, you can even do this. That means, and then you multiply 6 leads to write one policy. You need 6 leads to write one policy. Now that's only the sales side of the journey. You need the marketing side now. So let's talk about your landing page here. Your landing page needs, let's say you need 3 clicks to receive 1 lead. That's your conversion rate in the landing page. You might have a 50% conversion rate, and that's going to be two clicks to receive 1 lead. So, but start with, if you don't know where to start, just use those numbers. Like this is a good reference for you. So you need 3 clicks to receive 1 lead. That means you need this times this. You need 18 clicks to write 1 policy. Does that make sense? You need 18 clicks. With 18 clicks, you're going to have 6 leads, and with 6 leads, you're going to have 1 policy. So the maximum cost per click is going to be your marketing budget divided by the number of clicks. So your maximum cost per click is $9.72. If you pay more, then let's say you pay $25, that means that you're either going to be using more than your marketing budget was defined, or that means that you need to be more efficient in your marketing and sales journey. Okay, so that's and that's fine. However, to start and not to lose money, you have your safeguard here. Just keep your CPC to this number. Now, this is going to be, I'm going to paint this in blue, and you can do the same. And then after 2 days, and you do this, basically your campaign is right here. You set the campaign to this. What you need to do is, after a few days, let's say 2 days, go back to your campaign and see that performance. So you copy this, and then, because this is theory and this is going to be actual, so you just go backwards. You see, the first thing you need to see is, did your ads run? Because if you go to the store and you say, to the click store, and you say, look, I have $9.72 to pay for a click, and they might say, sorry, we don't have any clicks at that price. So your ads are not going to be shown. If they're not going to be shown, you don't have any impressions. So what you need to do, you need to increase the CPC, and then you need to see if that makes sense. If for some reason you do this and you realize that your CPC needs to be close to your commission, then this is not a marketing strategy that you need to be going after. You need to find other marketing strategies, and that's fine. You see, you did not go into this strategy losing money. That's the beauty of digital marketing. You will know beforehand if you have a shot of winning, and that's fine. If you start and you lose a little bit and let's say your campaigns, you had ads delivered, but you didn't have any leads, that's fine. You pause the campaign, and you know that your landing page has a problem because you had clicks but no leads. Then you go and you adjust your landing page. You make optimization so it will convert better, and then you run the campaign again. You do that for 2-3 days and see what the results were. As you do that, you're going to be building that muscle, the digital marketing muscle. That is going to allow you to sell anything, be mortgage, be any type of insurance products. And it's that easy. That's why I said that with this spreadsheet, you can see where your weakest link is, and then you go and address that link, right? So let me go back to full screen here so we can say goodbye. But before we go, let me answer this question here. Ideally, you should be on top of your campaign in the beginning every 2 days, every day if possible. Every day at the same time, go and see the previous day results, and then you're going to optimize. But then after a month of doing that, it is going to be well under its way, and then you can do it once a week, perhaps every 2 weeks, right? So that is it for today's show. Make sure that you subscribe to the channel, hit the notifications. Also, go to our Instagram profile, follow me there. That's a very good way for us to be connected. And also, if you have Telegram, it is a messaging app. Make sure that you join the Digital Insurance Broker channel. All right, I'll see you next time. Bye-bye.